Hi guys, welcome back to my channel. First thing I'm going to ask you to do is like and subscribe if the content that you watch is good, and let me know if there's any specific videos you'd like me to make. So, a little bit of background. I have an accounting firm, and recently I had to help someone set up a trucking business. And I helped this person from start to finish, even dispatching. And I said, wow, there was a lot of money in the trucking industry. So, I jumped in there and I became kind of part of this industry. And it's been a really cool ride. So, I'm making this mini trucker series. So, this video is cost per mile. A lot of owner operators, the problem is that you're a driver, you're an owner operator, and you really don't have time to kind of do all these calculations and all this math. So here's a really easy way to get your cost per mile made very, very simple. The important thing is you need to know your cost per mile. So if you don't have an accountant on board, you can definitely hit us up at the information below on the screen, and we can help you out with any accounting needs that you have or any dispatching needs. But let's get into this. So, the only thing I did is I opened up Excel. This is no special calculator. I've seen a lot of things on YouTube that are just not right. So, here's really simple. You have fixed cost and you have variable cost. Fixed cost is what it costs to move this truck no matter what. These charges don't change whether you drive or don't drive. You have to have these things in order to keep your authority and your company afloat. Then you have variable costs. They depend on the volume of business that you do. So the more loads you run, the more fuel, the more driver pay, the more washouts if you have reefer, dispatch fees, so on and so forth. So those fees may change. So they're called variable cost. Let's talk about fixed cost. So basically just get you an Excel spreadsheet, a notebook, or whatever, and write down your cell phone expense, your ELD, any subscriptions. I use Adobe to kind of edit contracts and stuff. I always recommend that if brokers send you contracts or rate confirmations, you have some sort of signature software like Adobe or DocuSign, so that number one, you can electronically sign things, because who has time to print? Most brokers, though, are pretty streamlined in that you can, but some you still have to have your own, as well as you want to be able to edit things and send things if you need to. So Adobe comes in handy. Accounting software, I use QuickBooks. I'm a QuickBooks Online accountant certified, so really great software in my opinion. DAT load board, as you can see, it's $300. Yes, I put the premium subscription on. Honestly, the DAT load board premium subscription is worth it. I've looked at some of the other load boards and I just don't find the freight to be as diverse and as high paying loads as the DAT. I would say the DAT is the superior main load board. The other ones do serve a purpose, but I really like DAT. And I think the premium one is worth buying, especially because you can jump first on those high paying loads that hit the load board. And then that's what you really, really want to do. So the next is HVUT. It stands for heavy use tax. Heavy use tax is something you have to pay every year. I think it's about $550. So what I did was I broke that down as a prepaid expense. That's something your accounting would put in your prepaid balance sheet. But basically, I took the $550 and you divide it by 12 months and you come out with a monthly payment. Workers' comp, same thing. A lot of carriers want you to have $1 million insurance auto. They want you to have 100 in cargo. Uber and Amazon want the workers' comp if it's required in your state, as well as some other insurances if they request it. So you just take the total annual workers' comp and you divide it by 12 months. Same thing with general liability. That's what GL insurance stands for. A lot of them want you to have $1 million general liability. That's for everything outside of auto. And you just take that entire year policy and divide it by 12. So that's how I got that rate. Auto policy, you'll know what your monthly payment is there. As you can see, $3,500. That's pretty high, I know, but this person is a new authority. And so when you're a new authority, it is higher. So it definitely is the age of the authority, the age of the CDL, and these sort of things. But guys, literally, if you make it your first year in trucking, your insurance goes down drastically. If you don't have any safety violations or any accidents, your insurance will become quite reasonable as your authority ages. So bear with it the first year. You'll still turn a profit, but you'll start seeing major profits in the years to come. The next is the truck payment. So this person actually owns their truck outright. However, that person paid the business because the truck is an asset of the business. So what I advise the owner operator to do is you put a truck payment in. Even though you paid your truck in cash, you put a truck payment in to pay you back. You're the bank. You're the financing company that loaned your business the money to buy the truck. So why wouldn't you want to pay yourself back? So a lot of people make that mistake. Put a truck payment in, even if you own your truck outright, to pay yourself back. Also trailer payment. Again, he owned the trailer outright, so you pay yourself back. But if you do have a truck payment and you do have a trailer payment, this would go there. Maintenance. Maintenance is a fixed cost. I will say that again. Maintenance is a fixed cost. You must put money away for maintenance. I would recommend no less than $800 starting out. Really, $1,500 would be ideal. One engine overhaul could cost you from $20,000 to $40,000. Most people, when you're buying a vehicle, hopefully has some sort of warranty if it's a newer truck. If it's not a newer truck, put you some money away for maintenance in a separate account that you don't touch, that's just for when your truck breaks down. Inside of that maintenance, you have to understand it's not only to repair the truck, but it's also to help you with downtime pay. Now, your truck is going to be down, and if you don't have a backup truck, if you're an owner operator with just one truck, you have to think about how much money am I going to lose a day by not running my truck. So obviously you can't recoup everything back, but by putting maintenance money aside for repairs, and if you put more money, like maybe $1,500, $2,000 a month, you may not have as much profit, but you have cushion for the rainy day when it shall come. Another thing is admin cost. So this may be the cost of your accountant, your person that helps you kind of do records and IFTA and that sort of thing. Every trucker, owner, operator, in my opinion, needs a good accountant to help you write off and depreciate assets, to help you keep track of all of your income and expenses, not just to bill your customers and your brokers for you to get paid, but also to show you how your trucking company is truly doing and understanding your numbers without you having to try to do it yourself. So you have time to drive, and that person has time to keep you compliant and get you all of the savings tax-wise. And we also help, like truckers, set up IFTA. We help you set up your IRP, your new authority. We know all the steps, your UCR. We take you through all of that. Watch my video on how to start working with any broker day one. You don't have to work with just certain brokers. No cheap freight is the motto. So definitely some sort of admin costs on the back end. I would put that in. Saves you time, saves you money. Now you go to variable cost. You have your driver pay, you have your fuel, reefer fuel, your dispatch, and your washouts if you have a reefer trailer. Now, the thing is, how did I get up with this calculation? So if you look at the screen, $8,836 is a total fixed cost. The only thing I did was I said this truck can run an estimated mileage, which is at the bottom there, of 8,400 miles a month. So on average, the truck runs 8,400 miles a month, about 2,100 a week. If you take the amount, 8,836 in fixed costs, and you divide it by the mileage, 8,400, that is how you get $1.05 cost per mile fixed. So for every load you take, $1.05 has to go to fixed cost. That is your bottom line to keep your truck moving. Variable cost. I estimated the driver pay by taking the cost per mile he paid his driver times the 8,400 miles the truck runs a month. And that's how much he would estimately pay his driver, as well as fuel and so forth and so on. Now, if I take the $13,000 and I add the fixed cost of the $8,836, I get a total of $21,936.16. Take that $21,000 and divide it over 8,400 miles, and it comes out to be a cost per mile total with variable and fixed of $2.61 a mile. Now, the reason why I'm splitting between fixed and variable is because variable costs can change, right? Because gas mileage can go up, gas costs can go up per gallon. So a lot of things can happen. Driver pay could go up, down. You may not use reefer fuel. You may use it as a dry van. So you need to know your fixed cost separate from your variable cost. But that trucking company now knows that every load they take, every time they go over $2.61, and this is a reefer company, so honestly, they're averaging about $3.20 to $4 a mile. So every time they go over $2.61 a mile, it's pure profit. So in 1 month, they're averaging about 39 cents in profit per mile, which is a monthly profit of about $3,200 per month, 39,000 a year. And that's being very conservative. A lot of times their costs are not that high. Fuel is not that high. Freight may pay higher. So there's a lot of variables that actually change to where the profit can come out as high as $5,800 a month, $6,000 a month profit on one truck. They've had, great months. So it's just a baseline. But this is how you get your cost per mile. You take your fixed cost, you add it up, and you divide it over your total mileage your truck will use. How do you know how many miles your truck will use? Here's a simple calculation to get 8,400 miles a month. This is how I got it. Only thing you do is you say, how many days do you run a week? 5 days? Well, a driver can drive an average of 500 miles per day on his clock. That's just average, okay? So that puts you at about 2,000 miles a week, okay? So if you can drive 2,000 to 2,500 miles a week, you take that number times 4, and that's how many miles you're going to run a month. So just take how many miles you're running a week times, how many miles you're going to run a month. Or you could do it to where, okay, 5 days a week times 4 weeks, that's 20 days. 20 days times, I can run 500 miles, and you can also do it that way. So if you guys have any questions, again, our information is below. Feel free to hit us up if you are looking for a dispatcher, accountant, or just some advice for someone to help you set this up. But I wanted to do this trucking series because it's so important for truckers to know your cost per mile. I hope I've made it really, really simple. Comment below if you want to see any other videos coming up soon in this trucker series. Thanks. You guys, stay tuned.